Good morning, dear friends. My name is Clive Thompson. Today is Thursday, August 28th, 2025, and it's coming up to 9 a.m. Outside behind me, you may be able to see it, it's raining cats and dogs. Feels like I'm in old Blighty again. So today I'm bringing you the financial, stock market and economic report covering yesterday and this morning. So the big news yesterday was all about Nvidia, and we'll also be talking about the silver stockpile, which will be formed in the United States. But let's start with the stock markets. So US stocks reached an all-time high on Wednesday. That's last night. The S&P 500 was up 0.2% to 6481. The Dow rose 147 points to 45565. And the Nasdaq technology mostly index climbed 0.2% to 21,590.14. So this wall of money continues to flow into the stock market, pushing stocks higher almost every single day. And a number of people said, what's this wall of money, Clive? Where is it coming from? So I'll just explain that to you. There's basically three sources. One is foreign buyers. It's foreign money coming home. Foreigners don't want to keep their money in fiat currency, and they're looking for something which will hold its value better. And given the past performance of US stock markets, one of the best performing markets in the world in recent years, they see that as probably continuing, and they see that as a better home for their money than keeping it in cash. Now, just in support of that, I'll read you a little article from Reuters a couple of days ago. They said, figures last week showed that foreign investors bought a net 192 billion of US securities in June. This followed a record net purchases of 326 billion in May, swelled by the largest ever inflow from the private sector. So that's your first source, the foreigners buying US equities. The second source comes from the increase in M2. That's the money supply, slightly broader than the narrow money supply M1. So as the government, or rather the Federal Reserve, prints money and money comes into existence, also via the banks increasing the lending, that creates money too. As money comes into existence, that money gets deployed into assets. So what's happened here, according to the official figures that you can read on the Federal Reserve website, money supply M2 over the last year has increased by over $1 trillion. And the third source of money for this wall of money coming to Wall Street comes from basically government spending. According to the government's own numbers, they have spent so far this year, 2025, and 2025 is not over yet. We've got another couple of months before the end of September, which is the end of the official year for the government. According to the official numbers, so far this year, they have spent $1.6 trillion more than they have collected in taxes. So again, that's new money coming into the system, 1.6 trillion from the government. Obviously, a lot of that money's gone into treasury bills and treasury notes and things like that, and bonds, because they have to borrow it. But effectively, that's easily turnable back into cash at very short notice. So it's as good as cash to many people. And of course, with all that extra wealth coming into the system, government gets poorer, people get richer. So that's extra wealth for the people at the expense of the government. Some of that wealth is going to find its way into tangible assets like stock market or gold or silver or property or other assets which are deemed to be or perceived to keep their value. So that's where this wall of money comes from, and it explains why the stock market keeps pushing higher. Of course, there could be a change in sentiment, and maybe that wall of money will find another home next week. It might not be stocks, it might be gold, or it might be property, or it might be something, or it might be Bitcoin for all I know. But certainly this wall of money is constantly looking for a home, and it's not going to go away as long as the government continues to spend a lot more than it takes in taxes. Now, of course, the Federal Reserve could shrink that by raising interest rates and sucking in money to the Federal Reserve and reducing the supply of money. But that doesn't seem to be the direction of travel. It looks more likely, very likely I would say, that they're going to reduce interest rates in September, which will basically be easing conditions and probably result in more increase in the money supply. So last night we had the results of Nvidia. They reported Q2 earnings. They were a very good set of results, very strong earnings. They reported 46.7 billion in revenue, with earnings per share coming in at $1.08, beating the estimate of $1.01 or $1.02. But despite these wonderful earnings, the shares dropped by 3% in after hours. They were down 5% at one point, and that was mainly due to concerns about future guidance, even though future guidance was very strong. But of course, there are concerns about chip sales to China. They didn't make any chip sales, or none of the H20 chip sales to China in the last quarter, but it's not the only thing which China buys. So there were concerns about whether sales to China in the future will impact the future growth of Nvidia. I don't think so, but because if China wants chips, they'll just buy them from another country through the back door, I suppose. Precious metals were up a little bit, or at least silver was. Silver was up 13 cents at $38.72. I'm just looking. I haven't got it in my screen at the moment. I might bring it up now. So up a little bit, and gold was down $6 at 33.90. I see it's 3394 at the moment on the gold price, and the spot silver price is 38.85. Both of those prices are up on the prices I just mentioned slightly. Now, silver has a new status from the 25th of August, a couple of days ago. It's been added by the US government to the US Critical Minerals list. That's in a report on the US government issued on the 25th of August. And basically, it's the first time it's been put on the critical minerals list. Why has silver been put on the critical minerals list? It's because silver is very important to the USA in two main strategic areas. One is the defense industry, and the second one is the electronics industry. Of course, we mustn't forget the solar panels industry, which is maybe a subset of the electronics industry. So the reason it's been put on the critical minerals list is because they need to stockpile it to protect against any disruption in supply. And the biggest supply of silver coming into America is coming from Mexico. Now, you might say, well, there's no risk to that supply coming out of Mexico, but they've assessed the risk at a 4% probability. Low probability that the supply would be disrupted, but high impact. So how could the supply from Mexico be disrupted? Well, it could be that Mexico unilaterally decides to prevent silver from being exported to the United States, maybe in retaliation for some tariff spat, for example, or it could be that there might be some civil or military unrest in Mexico or some other event which causes like a generalized industrial action, for example, which causes silver supplies to be disrupted. Not a very high probability, but it's not impossible. So that's why America has put silver on its strategic reserves. Now, they did sell off all their stockpiles in the past. Up till year 2000, they were selling almost all of their silver. They may have a little bit left now, but clearly now it's become a strategic mineral. They'll have to rebuild that stockpile, which should, in my opinion, put a bit of a floor under the silver price. But by the way, I will be releasing in the coming day or two a report on the silver mining companies. I've done a lot of research over the last few months. I'm doing 8 hours a day research on it for a few weeks now, and I hope to come up with a list of silver mining companies which would be net beneficiaries big beneficiaries in some cases of a higher silver price. Some of those companies could potentially be 40 or even 100 baggers. 100 bagger is a stock which goes up to 100 times its previous price. Now, that's not an investment recommendation. It's just talking about possibilities, and some of those possibilities would depend on what happens to the silver price as well as lots of other things. And of course, the companies with the biggest potential typically are the most risky. They might be mining in places which are politically unstable, or they might have a very high cost of mining, which would benefit greatly from a higher silver price, but would be very bad for the company with a lower silver price. But when you see my report, my investment report on YouTube, which will come out in a few days, you can have a look at those and decide if you want to research any of those companies a little bit further. Now, what else is going on today? We had in Korea this morning, they held the rate steady, but raised their GDP outlook to 0.9%. Korea is showing economic resilience. Treasury yields, at least on the 10-year, held steady at 4.25%. Let me just see if I can get the other bond yield. Here we are. So we got the 30-year bond yield is at 4.90%. In the UK, the 10-year yield is at 4.72%, and the 30-year yield is at 5.59%. Those yields are broadly unchanged from yesterday. Tiny fraction change, but nothing to write home about. Looking around the world, there's no real changes in the yields overnight. Today, we will have what's called the PCE inflation number. That's personal consumer expenditure. It measures the consumer spending and price changes, and it's what's known as the Federal Reserve's preferred inflation gauge. So the market is expecting 2.7%. If that number comes in showing higher inflation than 2.7%, the probability of a rate cut in September will drop. If that number comes in lower than 2.7%, it's very likely that the probability of a rate cut in September will move closer to 100%. It's currently about 85, 87% probability. 87%, I think I read. So if the reading comes in above 2.7%, the personal consumer expenditure, the Fed might make some signals that it's still mulling over the data whether to reduce the rates in September. On the other hand, if it comes in lower, the probability of rate cut goes up. Now, tomorrow, we've got two speakers from the Federal Reserve who are speaking. We've got Michelle Bowman, who'll be speaking at 2 p.m. in Kansas City. Now, she is known as one of the dissenters at the FOMC meeting in July. What does that mean? It means that when they had the vote on cutting interest rates, collectively, the Board of Governors of the Federal Reserve decided not to cut interest rates in the July meeting. But she was one of two people on the Federal Reserve Board of Governors who voted that they should cut interest rates. Anyway, she'll be speaking tomorrow, and we'll see what more she's got to say. But we're also going to have, on Monday next week, Jerome Powell will be speaking, and probably he's going to address the question of Federal Reserve independence, given that the Federal Reserve is now under attack from President Donald Trump, and he'll probably also talk about policy direction. Now, the market will be watching that with, ears wide open to see if there's any sign that he's caving in to President Trump's desire to have multiple rate cuts. We shall see. So coming up on the earnings front, we've got today results expected from Salesforce and tomorrow Broadcom. These are large companies which are in the technology sector, and their results will be watched widely to determine how the trend is going in terms of technology sales, and also whatever they say about the future will affect the technology sector's sentiment. So that's everything I've got to say about the financial markets today. It's not investment advice, it's just for information. If you want to hear more, and in particular if you want to see the Silver Miners report, which will be coming out any day now, please would you subscribe and don't forget to like. And if you have any comments or questions for the next few hours, I will be having a look at your comments and I'll try to reply to as many of them as I possibly can. And whilst I'm here, I'd just like to say thank you very much to everybody who made such nice comments yesterday. It's your lovely comments which encourage me to continue to do this kind of information. So thank you very much. And yeah, if you've got questions, I'll try and reply to them. You can also reach out to me on LinkedIn if you're on LinkedIn, if you've got a more complicated question which I can't reply to in the comments. So thank you very much, everybody, and I wish you a lovely Thursday. Bye-bye now.